So after a day's work, you must get something refreshing. Okay. So here's the refreshing series. Cracker MCQ series. It's for CAIIB, complete coverage of ABM and BFM, objective questions. It includes one-liners, few numericals also. Okay. So let's move on. So here, more on this batch which is coming up on August 8th. I'll come to this later. Okay. But remember, this is your last batch with the current portion. May 23 will be the new portion. So join this batch as fast as possible. I'll come to this later. Okay. Let's start with the MCQ series here. We are in module A, okay, and we are almost at the end of the module A now. So we are covering this taxation and GDP and budget parts, okay. The tax takes which takes away a higher portion of one's income is termed as, see here, this was the one of the questions which I had covered earlier also. So this tax is known as what? Means what? See here, which takes higher portion of one's income rise. Means what? As the income rises, see here, as the income rises, income, okay, as the income rises, so also the tax rises. So what does it mean? Effectively, what does it mean? For lower income, lower tax, higher income, higher tax. So this tax is known as what? Proportional tax, indirect tax, regressive tax and progressive tax, which is a term used for this. Anyone, if anyone has read it up till now, or you might have dealt it with sometime, somewhere, correct answer is very simple. That's known as correct progressive tax. 2-3 of you have answered. Here, I would suggest everyone should answer. And also one more important point: download this Adda 24/7 app. Also join Officers Adda 24/7 YouTube channel. On this app, you'll get the study material, notes, video lectures, live classes, tests, everything on this app related to CAIIB. Also, this series is going on Officers Adda 24/7. So join this channel ASAP, subscribe it, and also click the like button, isn't it? Bell icon, yeah. Okay, so that is known as what? Progressive tax. Now corporate tax. Now corporate tax is imposed by whom? Now this is something new. Corporate tax. Local government, central government, state government, and both central and state government. I know many of us don't know this corporate tax concept actually. But who can answer me? Tell me fast. Who can answer? Okay, let's see. Local, central, state. Okay, I'll give you the hint. Both central and state is out. State government. Okay, I have to give one more hint. Local government is out. Okay. So B and C. Which one do you think? Okay, before answering that, I'll explain you the concept here. I don't want only the answers. I want you to understand the concept. Otherwise, what happens? I'll just give the answers and you'll move on with the answers. It's not the right way, okay? You must understand what is going on, okay? See here, in India, the tax structure, means tax system of India is basically divided into 3 parts. Say this. Central government, this is not my logic, okay, it's given on Google anywhere you go, okay. So the tax structure in India consists of 3 federal parts: central government, state government and local government, okay. Now the central government has the powers to levy which type of taxes. Here I'll only cover what is required, important one. Central government of India levies taxes such as customs duty, income tax, service tax and central excise tax, okay. So central government levies these 4 taxes: customs, income, service and central, okay, central excise. Service means now it's the GST, okay. Role of central and state, then there are various local bodies also. Say this, state government covers what? The taxation system in India empowers the state government to levy income tax on agriculture income, professional tax, value-added taxation, now it's GST. Now GST is VAT is removed from the state government and it is brought in the ambit of central government. And state excise duty, land revenue, stamp duty. You'll say, okay, everything is clear, but where is corporation tax? Okay, so understand what is corporation tax. Corporation tax is an income tax. Corporation tax is an income tax. Here I'll write, show you. See this. Corporation tax is a direct tax imposed on net income or profit that an enterprise make from the business. So get it? Got it? So corporation tax is levied by whom? It is levied by central government. Okay, coming back to this MCQ series. Corporation tax is levied by central government. Okay, so the answer is B. See here, it's not only important for you to give the answers. I don't want only answers in the comment section. A, B, 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 B. No, no, no. You must understand this. Only then you will be able to clear CAIIB. Remember, even when I teach in the CAIIB classes, I teach it this way only, so that you understand it and remember it for lifetime, not only the CAIIB exam. Okay, and definitely CAIIB exam you'll clear it. Here, logic behind CAIIB is once you understand any topic, you'll definitely be able to answer in CAIIB. It's not like JAIIB mug up. Okay, no, no, not the same. Which of the following are direct taxes? Gift tax, income tax, corporation tax, all of the above. Direct means what? Here, I'll tell you what is direct tax, which you and me pay directly. You and me pay. Okay, GST. Do you and me pay it by giving separate amount? No. It is there. It's called as indirect tax, because whenever you purchase something, you automatically give the GST. But direct tax means what? Income tax. We pay that income tax. Of course, salaried person, we don't know that we are paying, but income tax form, that Saral form has to be filled in, right? So that's a direct tax. So which of these taxes are direct taxes? Gift tax, income tax, corporation tax. What is corporation tax? It's an income tax. What is income tax? It's an income tax. Okay. Gift tax means what? Understand, gift tax is also a direct tax, because although it's not an income tax, but income tax department, IT department considers, or IT Act, it considers gift tax as whenever you give something bigger amount gift. Okay, you don't give some gift on the birthdays and it doesn't get taxed on that. Okay, but on the birthday, if you give a house to somebody, you might have that much money. You can give a flat in Mumbai as a gift to somebody on birthday, but when you give such a huge amount, then you have to pay the gift tax. So that, because that's a sort of income to that person, isn't it? So that's why the answer is which one? A, B, C or D? Correct. Answer is D. Understand this. Okay. Remember, gift tax, income tax, corporation tax, all are related to, I would say, income only. Okay. From the following, which is not a direct tax? Now, which is not a direct tax? Okay. Tax on wealth, tax on entertainment, tax on income, tax on expenditure. Now, which is not a direct tax? Who can answer me fast? Which is not a direct tax? Okay, who can answer me fast? Tax on wealth. Wealth tax, do you pay it separately? Yes. If you don't know, I'll just because we don't know, we don't have that much wealth, isn't it, to pay wealth tax, right? So wealth tax is a separate tax paid directly by filling up the form. Income tax you already know, we fill up the form. Tax on expenditure, yes, that is also a tax. Suppose if you make heavy expenditures, remember this, for normal expenditure nobody charges you anything, but if you make heavy expenditures, then those expenditures tax, in that expenditure tax is to be filled in. Okay, so that is also out. So I should mark it cross over here, because we want not. Okay, and these are all direct taxes, and entertainment tax is not a direct tax. Why? Whenever you go to a cinema hall, you buy a ticket, you already pay a GST in that. Okay, so is this a direct tax? No, right? So that's why entertainment tax is not a direct tax. Got it? A direct tax is the one where tax is levied always on the property. See here, direct tax means what? Firstly, understand, direct tax means you fill up a form. Okay, you fill up a form, only then you pay it, like income tax form, right? Same logic is applied to all those direct taxes. Tax is levied always on property. Points of impact and incidence are different. Now this is something which I'll have to explain you, because not I, see here, I am not important. Where do I get this? I get it from Google and some important books which I have studied throughout my life, right? So I am not important. You need to understand this as a part of your future studies. Okay, tax is levied on property, point of impact and incidence are different. Tax is levied on wealth. Points of impact and incidence are the same. Okay. So direct tax is the one where, see here, tax is levied on property. Yes, it is a part of this direct tax only, but it is a logic of direct tax. So this can't be the answer. Okay. Tax is levied on wealth. Yes, that is also right. But if you consider, if I put C as right, then it means that only C is right and property tax is not right. if I put wealth A is right, then it means that only A is right and C is not right. If the answer would have been all of the above, then that would have been the correct answer. But here the answer is not given as all of the above, so we have to choose the best among these. So best among these, here we have to means neglect all those or remove all those which are not full in themselves. So these two are out. So now point of impact and incidence are different. Number one. Point of impact and incidence are same. Number two. Now what do you mean by this? Difficult one. See here, I'll tell you logic behind this. Direct tax. Point of see here, correct answer I'll give you first. Correct answer is B. Point of impact and incidence are different. Why? What do you mean by this point of impact and point of incidence? See this. Direct tax is paid on one. Let's take one simple example of income tax. Income tax is a direct tax. Okay. Income tax. It's a direct tax. Okay. Okay. Now we'll consider the two parts over here. Impact and incidence. Okay. What is the impact? I'll write it over here. Okay. It's simple to understand. Where impact and second is what? Incidence. Okay. Incidence means what? Where do I earn this income? Do I earn this income where I pay the tax? No. I earn this income at my workplace. So in this point of incidence is workplace over here. Workplace. Okay. What is the point of impact? Means I pay this tax, and this tax affects whom? It affects general public, right? Because the more I pay the taxes, the better it will be for the public, right? For the government, and the government will be able to do good things, more good things for the common public. So that's why general public is affected. So impact is where? In general public. Where is the incidence? At my workplace. So that's why these two are different. So B is the answer over here. Okay. A regressive tax will tend to redistribute income more. So regressive tax means what? Firstly, what is regressive tax? Okay, regressive tax. Okay, we'll see that. Let's see. I'll show you live over here what is regressive tax. Let me go to the. Let's go to Google, because Google is the guru, right? Google guru, we say it. So Google guru. Let's go to Google guru. Regressive tax means. See here, we need to understand everything. Regressive tax. See here, regressive tax is a tax applied uniformly, taking a larger percentage of income from low income earners than high income earners. Now, do you feel this is correct one? What do you say? See here, taking a larger percentage of income from low income earners to than from high income earners. Okay. Now this is what I meant. The difference was for progressive tax and the regressive tax. Okay, I'll write it over here now. Now for you to understand, now you got this concept of this regressive tax, right? You got this. Now I'll show you the difference between the two. Okay, let me go to the slide again. Yeah, we are here. Okay, so now understand the concept. Progressive and regressive. Progressive. Okay. My writing is a bit bad, okay, but then also progressive, and second is what? Regressive. Okay, regressive. Now understand the difference between the two, progressive and regressive. See here, if I am earning, let's say 1,000, let's say what, 1 lakh rupees, okay, 1 lakh a year, let's say, simple one, huh? And I am earning what, 1 crore, 1 CR a year. Okay, two different incomes. So what does it progressive and regressive do? 1 lakh year, 1 crore year, 1 crore a year. Okay. Now understand the difference, which is better, and why progressive tax is better. I always propose progressive tax, not regressive. Why? Because as per regressive tax, both the earners will have the same tax bracket. Means suppose if I give 30% for all. 30%. So 30% of 1 lakh is 30,000 gone, minus 30k. So what remains with me? 70k. So plus 70k remains with me. And here 1 crore a year, minus 30 lakhs gone. And what remains? Plus 70 lakhs remains. Now if I am very rich and I am earning 1 crore a year, then 70 lakhs, if they remain in me, my life is lavish. Even then, even when 30 lakhs go. But for this, if out of 1 lakh, 30,000 is gone, 70,000 only remains for the year, divided by 12. Okay? 12 5 the 60, 12 6 the 72, roughly 6,000 a year, a month, 6K per month. Can you spend anything? Can you earn or live a normal life with 6K with a good status, right? And here 70K means it's 6 lakhs, almost 6 lakhs per month. So that is okay. So this is the problem with regressive tax. Regressive tax says all the tax bracket, let it be anyone, they will be charged same, uniformly. So is it right? No. Progressive, what will it say? Okay, if you are earning 1 lakh a year, your tax bracket is, let's say, 5%. Or 0 also. Why 5%? 0 or 5%, let's say. 1 crore, you will be charged 30%. So isn't it good? Because even if 30 lakhs goes from this guy, 70 lakhs remain with him. He can live a decent life, right? And this person, if he is charged on even 1 lakh a year, he won't be able to live, right? So that's why. So this is the meaning of progressive and regressive. The regressive tax will tend to redistribute income more equally, equitably, unequally, and inequitably. So what is the correct answer? Okay, remember, now this is a difficult question, really difficult question. It distributes the income. We are talking of distribution of income, not tax. Tax is equal in regressive, but distribution of income is unequal, because here the person gets lesser amount. See this, he gets only 6,000 per month, and this person gets 6 lakhs per month. Okay, so that is the difference. So it creates a gap between the society. The poor will get more poorer and rich will get more richer. Whereas progressive tax is the best solution, and that's what is applied in India. Okay. First question, I think so. We had the same question, right? Which of the following does not grant any tax rebate? No tax rebate is granted. Does not. Okay. Indira Vikas Patra, PPF, National Savings Certificate, and National Savings Scheme and National Savings Certificate. Okay. Which of them do not grant any tax relief? So which one? Indira Provident Fund, Public Provident Fund, National Savings Scheme, and National Savings Certificate. Many of you might be knowing this about PPF. Okay, we do EPF, PPF. We do it under that section 80C, I think so. Yeah, 80C. NSS also 80C. This also 80C. So remember, answer is only Kisan Indira Vikas Patra. Remember, Indira Vikas Patra is just for investments. It has nothing. Nowadays even that is gone almost. Okay, because those all higher rates of interest are gone. Now the rates of interest have lowered a lot on all this Kisan Vikas and Indira Vikas. Okay, so these fixed income instruments are gone nowadays. So Indira Vikas Patra does not grant any tax rebate. Okay, the Indian income tax is direct and progressive, obsessive, indirect and proportional, direct and proportional. Firstly, let me give this point. Obsessive, it's not obsessive. Obsessive means what? Hunter, pay the tax or I'll this whip you with the hunter. Okay, not this one. Indian income tax is very flexible, I would say. Okay, so indirect and proportional. Is it only indirect? So here proportional is okay, but is it indirect? Only indirect. Indian tax system are both direct and indirect taxes, right? Indirect is that GST and direct is all income tax. So this is also out. So what is this? Direct and progressive and direct and proportional. Now proportional means what? See here, there is a difference between these two words, proportional and progressive. Okay, proportional means what? If proportional means simple example, this same example. See this tax is proportional, means 30% on all. So proportional means what? It's correct. If you consider the proportion wise, 1 lakh will leave 30,000 and get 70,000. Proportionality is correct. 1 crore will leave 30 lakhs and get 70 lakhs. So proportionality is correct. But progressiveness means what? 1 lakh shouldn't be charged any tax. This 30,000 also give it back to him. That is progressive. So what is in India's income tax system? It's progressive. Understand the difference between proportional and progressive. Okay. Temporary tax levied to obtain additional revenue is called additional revenue. Means whenever any urgent tax is levied. Okay. by the government for some reasons. Any reasons might be the case. Fee, surcharge, cess, and rate. Surcharge means what? Fee means what? Fee is for filling up the forms. You give any government exams, right? Navratna exams, they come. That's what you pay is fees, right? So that is fees. Fees is out. Is it temporary? No, it's long term. Surcharge, I'll come to it later. Cess is what? Cess is always levied on the full amount. Here, whenever I pay the fees and then government levies cess on that fees, right? Cess means what? It's point percentage on the amount which is paid. So this is also out. This is not temporary. Rate is different. Rate has nothing to do with this. Rate is meant rate of tax or anything. Surcharge is the correct answer. Why surcharge? Because remember, surcharge is levied for the shorter period. Shorter period means, for example, let's say the oil prices, if they go up nowadays, they are almost 110, right? So whenever there is a Russia war, then government will do what? They'll apply a surcharge on that for temporary period. Now surcharge can be removed at any time, but the rate given of the taxation can't be removed anytime. Okay, that's why surcharge is used for the temporary phase. Which of the following taxes is or are levied by the central government and collected by the states? Now this is different. Levied by the central, collected by the states. Estate duty, stamp duty, passenger and goods tax, tax on newspaper. This tax, I'll tell you, you pay every time whenever you buy a property. Now you can answer A, B, C or D. Which one? You pay on this. Which one? Which is the tax which you pay on property? Means whenever you buy a property, you buy what? You buy stamp paper. So that is stamp duties. Okay. Stamp duty is a tax which is levied by central government but collected by states. Okay. So this was the question bank, and before going I will tell you, see this batch which is coming up from August 8th for ABM, BFM in retail. Remember this batch. This batch is the last batch with the current portion. May 23 will be having a new batch, new portion, and remember this code Y432. Never forget this code. Okay. Now what will we be covering in this batch? We'll be covering all the numericals, case studies, objective questions, theory, you name it, and whatever is required for CAIIB will be covering all. Okay. So let's okay, now about the fees part. This fees part, many of us complain, many of the guys complain that it's heavy, but remember, it's not heavy. Go to the discount part. See this, I'll show you live over here. Okay. Let's go live on Adda 24/7. Okay. See this, yeah, I'm on Adda 24/7 now. See this, over here, if you see live, see this, go to Adda 24/7 first page, you'll see this JAIIB and CAIIB. Click on this front page, JAIIB and CAIIB. You'll see the packages, okay, all the packages. See this, JAIIB, CAIIB, Mahapack, JAIIB, CAIIB, English batch. So click on this English batch. You can buy Mahapack also. Mahapack is like that OTT subscription. You buy that subscription now and keep it for whatever period it is, okay? 1 year, 6 months, generally it's for 6 months. You keep it for 6 months and you'll get everything. Whichever batch comes under that, you'll get it under that Mahapack. Okay, so I would suggest you buy that Mahapack. Now about this batch, see this, the fees is shown as 17,999. Click on this, click on the code, see this. You can read this. All the things which I told you, the same thing are there. 120 plus hours of interactive ABM plus BFM plus retail, intensive practice, recorded videos, then expertise is there with the professors, and you can ask the questions till the last day. Okay, now look at the fees part, 17,999. Click on this offers. Once you click on the offers, put this code Y432. Click on apply. See this fees, 80% off is going on now. 80% off, 17,999 reduced to 3,599. So if you clear CAIIB, this 3,599 is recovered in how many months? Calculate fast. Okay, even if you are a new joiner, 1,000. If you are 4 to 5 years, roughly you'll get 13 to 1400 increment, right? So within 3 months, 3 to 4 months, you'll recover everything. So this is an investment for lifetime. I would suggest go for it as fast as possible. Okay.